welcome. I am Laban Johnson, CMO Abundance Asset Management, joined with Chris Perkins, CEO Abundance Asset Management. We are wrapping up the second half of the third month of live trading in the Abundance Asset Management Fund, trading the Abundance strategy, which is perfected by our very own CEO, Chris Perkins. Chris, can you share some insights on the performance of the Abundance strategy over the past 2.5 months, and how it's performed compared to your expectations?
Yeah, for sure. I mean, it's been performing pretty well. That being said, the QQQ has also performed pretty well. Since the 1st of May, it's up 0.81%, which is, half decent performance. And Abundance Asset Management's trade result is up 0.9%. So we're beating it by 0.09% as far as the trading goes at this moment. Our primary goal is to outperform the S&P 500. And so the SPY is down 1.02% from May 1st. So we're outperforming it by 1.92%, essentially. Yeah. So mission is going exactly as the models showed it would. And we just keep staying on track, just keep doing exactly as the math tells us to do.
So all systems are green.
Yeah. So far they're green, but they're not always going to be green. And in our conversations, when you're like, "Oh, the market's up so much today," and I'm like, "Yeah, I'm kind of disappointed."
Right. Your response is the opposite of what we expect. Like, yeah, the market's doing great. Like, yeah. But on
Yeah.
a bad day, Chris is ecstatic.
Yeah.
Can you explain why that is, Chris?
Yeah, I can explain why it is. So we don't buy shares, right? So we're very rarely fully invested in the market. We haven't been fully invested in the market since we started trading. So we're selling options, and so when we sell puts, even though it's a bullish slash neutral trade, meaning like the stock can go sideways and it profits, or the stock can go up and it profits, I'm kind of hoping that the trade will go against me so that we can acquire some shares. The reason for that is because when the shares do go up massively, we underperform them because we're not fully invested in the stock. And the only way really to outperform them is by using leverage or to match the investment, increases to be fully invested in the stock. And our system is designed to outperform in most market conditions. And, the QQQ since March 1st is up 10.72%. And so if we annualize that out, that's 2.5 months essentially. So if we annualize that out, it's an annual rate of return of 51%. So it has done that return before, but I think only 3 times in the history, in the 23-year history of the QQQ. So it's rare that it happens, and in those situations, we will underperform. But since inception of Abundance Asset Management, we have a trade result of 4.93%. So we're doing just fine. And if you annualize that out, it's 23.6% return. So
nice. That's probably a lot more sustainable than just hoping the market just keeps going crazy.
Well, that and like we're kind of agnostic as far as market sentiment. We just remain agnostic because, if you factor in, the debt ceiling fears that are circulating, the high interest rates, the inflation rates, like there's always a crisis happening, the war, like if you want to look at bad stuff happening, there's all sorts of bad stuff. And the market is basically like, who cares? It's always forward looking, and I've said this before, and I've said this on lots of calls to people like, well, the market tends to recover before people think it should. And it's always forward looking, right? So when you think like, oh man, this couldn't get any worse, the market's going to just crash. And if it's already crashed by 30%, the odds of it continuing to crash by another 30% are marginal at best.
Right.
And I mean, I'm not saying, yeah, well, I'm not saying it won't happen either, right? I'm not saying it won't happen. It can happen. Anything can happen. But what's your risk mitigation, right? You're risking by not being involved in the market at all, you're risking missing out on returns.
Right. Right.
And, by also not having some cash on the sidelines, you're missing out on not being able to buy the dip per se.
Right. If you only wait until the market's going great, then you may catch the tail end of something, or you might end up catching the beginning of something else.
Well, this is what most people do, right? They buy high
Right.
and sell low.
Right. And it's
And
we're trying to teach them. We're trying to
yeah,
teach them.
well, and we do, the strategy is designed to do exactly the opposite of that, right? So,
So that's built into the strategy.
yeah.
So if you're investing in the strategy, you're investing in the fund, you don't really have to be worried about that because it's already happening.
No, people that invest with us, they can see everything that we're doing if they want
Mm.
to. They can pay as much attention to it as they want or as little attention to it as they want, but they can rest assured that up, down, sideways, we're essentially just picking up crumbs all day, every day. And if the market goes up, we will tend to be selling shares. So to like this week, for instance, the QQQ was up massively all week this week.
Right.
And we've gotten rid of some shares. And then next week, if it continues to go up, we'll get rid of some more shares and we'll essentially go back into cash if it keeps going up. And there's nothing wrong with having a bunch of cash on the sidelines. I don't think it will continue to run up at the rate that it's been running up the last few months, but I also don't care if it does. That's okay with me.
Right. Here's a question from a viewer, Chris, is can you walk us through your process for selecting and managing investments within the abundance strategy? And they also say, how do you identify opportunities and how do you manage risk, which I think we just talked about a little bit.
Yeah, so the publicly traded markets, I like to think that there's an opportunity every second of every day that the market's open, right? I mean, there's always options for sale. There's always open interest for options on the QQQ. The reason that we choose the QQQ to invest in is because we believe wholeheartedly in technology and technology's ability to scale and change people's lives. Over 50% of the QQQ is invested in technology stocks. That being said, it has everything from grocery stores to movie theaters to, like you name it, industrials, pharmaceuticals, healthcare, health tech. So it's quite diversified, but not so diversified, but getting drugged down by laggards.
Right. And that's probably the difference between the QQQ and the S&P in a nutshell.
In a nutshell, yeah.
When the
And
QQQ gaps up, the S&P doesn't really get that same performance at the same bank.
exactly. And there's no
Interesting.
financials in this. And banks have,
Mm.
suffered
Oh,
some losses. I mean, they're starting to
true.
recover. Some of them are starting to recover now. But the QQQ is the world's 100 largest companies by market cap, non-financial.
Mm. That's a big deal. That's a big
Yep.
difference.
Yep. It is.
Awesome. Looking ahead, um, what are your goals and plans for the strategy in the coming months and for the fund itself?
In the coming months, we just want to raise more capital. This strategy and we're always going to be capital constrained. So one of the benefits of the strategy is it's near infinitely scalable. We could have $100 billion doing this, and it would still work just fine. But it increases the frequency at which we can make trades. So you could almost think of it like an insurance company. If you open the doors to an insurance company, just imagine 5 million people a day lined up out your door to buy insurance contracts, and you're only limited in the amount of contracts you can sell by the amount of money you have to insure those assets,
Mm.
right?
Right.
So the more capital we have under management, the more contracts we can sell.
Makes sense. Makes sense. So far as investors who might be looking into the fund, considering investing in the abundance strategy, what should they expect and what kind of timeline should they have in mind for seeing returns on their investment?
So we kind of look at our investors as we're getting into a relationship together, right? And we want to date a little bit before we get into this relationship. So I think the best way is to educate people. I always want people to know a little bit about the strategy because I say an educated investor is a long-term one, right? Because if you know what you're investing in and you build some trust through that education along the way, then you have this confidence in the management and their ability to execute, our ability to execute. So we have a 1 year lockup period, which I call the dating phase, right? It's like we're going to lock your money up for 1 year because we don't want you to freak out in a month because the market's crashing, because that's an opportunity for our strategy, right?
Right.
So we don't want you to freak out. And so that 1 year lockup period is more to protect the investor than anything else. After that 1 year lockup period, it's like, okay, we're done dating now, right? We've done everything that we've told you we're going to do. Here's your performance relative to you buying into the market. How does that look compared to what we showed you how it would perform? Our KPIs, our key performance indicators, right? If it looks the same, we've done everything on our end. And, you would be happy with that because you've seen that when you were coming into the investment. So let's have a 5 year time horizon. And like coming from real estate investing in the past, 5 year time horizon is kind of standard, right?
Right.
You're not really going to invest for less than 5 years. That, turning around a piece of real estate, for instance, is very costly, right? You're a lot of transaction fees, realtor fees, lawyer fees, all these things. And so we're able to do constant contracts, essentially buy and sell contracts. And instead of paying to execute those contracts, we get paid to execute those contracts, right? So it's multidimensional profitability, and the compounding factor is what's powerful, and that doesn't really kick in a meaningful way until about the 1 year mark.
Interesting. But meanwhile, you're not plunging toilets. You're
Yeah,
not having to deal with the evictions and tenants and stop paying and all that kind of thing. It's a totally different game.
yeah,
It's almost
exactly.
like sitting and watching the game versus being in it.
Yeah, yeah,
But you've got money riding on it, and it's going well.
yeah,
And you were speaking about education, and I just kind of want to wrap up on the point that education is obviously something that's very important to us. You've educated me a lot, the strategy and how things work, how options work. It's not something that, I mean, something I've learned about before, but if you don't do it every day, it's not something that is muscle memory, right? And at the Abundance Asset Management Fund, we're committed to empowering individuals, promoting financial literacy, promoting responsible investing, and helping people get a leg up, right? And one of the things I want to mention too, just kind of to end on this, is well, we've got educational resources that we are putting together. We're going to be doing lots of videos. We've got can I say ebook? Can I say the word ebook?
yeah.
We've got an ebook we're working on. It's not finalized yet, but we're working on. And we want you to keep in touch and contact us, but also follow us. We've got a Facebook group, which is our own community, Abundance Asset Management. We've got our YouTube channel. This YouTube channel, you might be watching this one right now, and LinkedIn. We're on LinkedIn. We've got the Money Talk Facebook page, which is kind of an educational, it's more a financial educational resource. It's kind of self running kind of thing. And we'll be posting some short videos there. And most importantly, like and subscribe and share with your friends to help us get the word out. And because that's very helpful to us. And if it's something that you believe in, if you believe that we can do it, then definitely give us that vote of confidence. We definitely appreciate it, and we'll take good care of your friends. And with that, I covered like, subscribe, and share. Any closing thoughts, Chris?
No, I don't think so. I think it's important that people aren't afraid because, one of the other things that investors can expect is massive amounts of transparency about what we do, right? I think transparency is the key to building trust as well. So
I can tell you, and I think anyone would appreciate the ability to reach out to Chris and say, "Hey, how are things looking?" And he's like, can you hop on a Zoom right quick? Let me show you. You won't get that from a lot of places this day and age. I can't get that. I'm not gonna name names, but
yeah,
name any big bank or big investment company. You're probably not gonna get that. If anything, you're gonna get a salesperson that's gonna try to sell something else.
yeah, yeah,
We
exactly.
have one thing, and it's this fund, and it's not like we have to move you into this or into that, into this, into that, or let's move it back. Let's,
Yeah,
and that's the great thing about it. Like, there's no like sales pitch.
yeah,
It's just this is what we're doing. And you
Yep.
can read all about it, you can learn all about it, you can ask all about it. Chris is right there. I hope you stay there like that. No, and don't start hiding behind AI.
Yeah. Yeah, that's true. Everybody's hiding behind AI right now, but it's one, it's a whole other thing to deal with a real person.
Yeah, yeah. I think folks appreciate that.
Yeah. All right,
Awesome.
Laban,
Well, thank you
thanks a
for
lot.
joining me, and good luck good luck in the future. Good luck in the next couple of weeks, and let's get back together towards the end of the month.
Absolutely.
Awesome.
Chat soon.